Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, January 19, 2026, and here is everything you need to know as the markets close for today. The Indian stock market closed on a cautious note this Monday as the Nifty 50 index fell by 108.85 points or 0.42%, ending the day at 25,585. The Sensex slipped 324.17 points or 0.39% to finish at 83,246. BankNifty gave in to profit-taking pressures, closing at 59,914, down 0.7% from the previous close. Overall market sentiment turned decidedly bearish as heavyweight earnings from Reliance Industries and ICICI Bank disappointed investors, while global geopolitical tensions and persistent foreign investor outflows weighed on sentiment. The rupee also moved through notable levels, closing at 90.95 against the dollar, indicating continued weakness amid broader dollar strength. This mark represents a decline from the Friday close of 90.87, reflecting continued pressure on the Indian currency as global uncertainty drives capital outflows. On the gainer side, InterGlobe Aviation was the standout performer, surging 4.16% on robust demand expectations and operational confidence. Kotak Mahindra posted healthy gains of 2.39%, buoyed by a strong quarterly performance and improving margins. Hindustan Unilever rose 2.29%, offering defensive appeal to investors, rotating away from riskier segments, while Kotak Mahindra Bank gained 2.22% and Maruti Suzuki climbed 2.04%. Among smaller names, Jindal saw emerged as a remarkable gainer with an explosive 15.48% jump, while PB Fintech, Hitachi Energy India, Bank of India and Colgate-Palmolive all posted gains between 3.4 and 3.77%. The bright spots came primarily from selective stock strength in discrete stories rather than broad market participation. On the flip side, Wipro faced its harshest selling of the session, plunging approximately 7.95% after the company guided for fourth quarter growth between 0 and 2% in constant currency terms, disappointing market expectations. Reliance Industries declined 3.07% despite delivering respectable earnings as investors fretted over valuations and profit-taking. ICICI Bank fell 2.84% as its Q3 profit dipped 4% to 11,318 crore, though net interest income grew 7.7%. Among broader market names, Eternal lost 2.87%, Tata Motors passenger vehicles fell 2.84%, and Max Healthcare declined 2.51%. In the mid-cap space, Godrej Properties suffered a 5.25% correction, while in small caps, Mangalore Refinery and Petrochemicals plunged 5.59%. HBL Engineering dropped 5.41%, and Aster DM Healthcare lost 4.90%. Both indices tested important support levels during the session. Nifty found initial support near the 25,600 level, which acted as a floor as sellers attempted to push lower. A break below this zone could open weakness toward 25,500 or 25,450. On the resistance front, the 25,900 zone represents a key hurdle, with sustained closure above this level needed to initiate a fresh rally toward 26,000. BankNifty tested support around the 59,700 to 59,800 band, which proved resilient, suggesting institutional buyers remain active at dips. Resistance for the banking index sits near 60,000, with heavy call writing at this psychological level acting as a barrier to further upside. Sector performance was mixed, but notably defensive. The Nifty FMCG index outperformed, gaining 0.67% as investors rotated into safer consumer-oriented businesses, providing a relative bright spot in an otherwise negative session. The Nifty IT index declined 0.47%, weighed down by Wipro's sharp sell-off, despite gains from Kotak Mahindra and other names. The energy and realty sectors were among the day's weakest performers, with both indices ending in the red as profit-taking and rotation pressures mounted. Auto stocks showed minimal change, while banking stocks displayed mixed performance, reflecting divergent quarter-on-quarter results from lenders. From a regulatory perspective, the SEBI has been actively working on enhancing market infrastructure and investor protections. The regulator has proposed a comprehensive framework for regulating significant indices, requiring registration of providers and improving transparency in index governance. Additionally, discussions continue between SEBI and the RBI on developing bond derivatives to enhance liquidity in India's debt markets, with plans to boost retail participation through lower minimum investment thresholds and improved financial education. These regulatory moves underscore the authorities' commitment to deepening and broadening capital markets. In the commodities space, precious metals surged sharply on safe haven buying. Gold futures on the MCX for February delivery hit an all-time high of 1,45,500 per 10 grams, climbing nearly 1,800 rupees or 1.25% during the session, driven by geopolitical tensions. Silver futures jumped even more dramatically to 3,01,315 per kilogram, up 13,553 rupees or 4.71%, marking fresh multi-month highs. On the spot market, gold was quoted at around 1,45,310 per 10 grams, while silver trading near 305 rupees per gram. Crude oil prices remained soft, with prices around 5,576 rupees per barrel, reflecting global demand concerns and ample supply conditions despite geopolitical tensions. Geopolitically, the market's risk-off tone was driven primarily by US President Trump's escalating rhetoric over Greenland, where he announced potential 10% tariffs on imports from Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, and Finland, effective February 1st, escalating to 25% by June 1st, unless the US gains approval to purchase Greenland. This hawkish stance has rattled European markets and triggered a flight to safety, benefiting gold and weighing on equities as investors fear potential trade disruptions and NATO alliance strains. The broader geopolitical backdrop, including tensions in Eastern Europe and Middle East dynamics, continues to support defensive assets and suppress risk appetite. Looking ahead to tomorrow, the technical setup suggests a consolidation phase with directional conviction needing to emerge. For the Nifty 50, holding of the 25,600 support is crucial for stability. A break above 25,900 and confirmed closure could lead to a retest of 26,000 and potentially higher levels toward 26,200. Conversely, a decisive break below 25,600 would invite weakness toward 25,500 and potentially 25,450. For BankNifty, the 59,800 zone has proven sticky, suggesting institutional support remains present. A move above 60,000 would signal fresh strength, while a breakdown from the 59,500 level would shift the bias decidedly lower toward 59,000. Key triggers tomorrow will be any additional earnings surprises, global market reaction to Trump's tariff announcements, and crude oil price movements. The actionable takeaway from today's session is this: consolidation is the name of the game, but the technical levels matter tremendously. Traders should focus on the confluence zones we've identified, 25,600 for Nifty and 59,800 for BankNifty, as these define the daily ranges. Meanwhile, safe haven trades in gold and silver remain attractive given the geopolitical backdrop, and defensive sector rotation toward FMCG and select banking names offers relative safety. Avoid aggressive short positions at support levels, as institutional buying remains visible on dips. As we head into a week marked by the upcoming union budget, expect continued volatility and sector rotation. That's the wrap on today's market action. Send in your questions, your market views, and your trade ideas, and tune in tomorrow morning for our detailed opening analysis. Stay tuned to catch tomorrow morning's update right here on What Moved the Market. Keep building, keep learning, and I'll see you back here tomorrow. Thanks for listening.